Welcome to the Financial Blueprint, PrimeRevenue's video series, where we get an opportunity to take a deep dive into some of the most pressing global issues that are out there. I'm your moderator for today, Gavin Cicconelli, COO with PrimeRevenue, and I'm sitting here with Nathan Feather, CFO of PrimeRevenue. Nathan, thanks for joining me.
Thanks, Gavin. As Gavin said, I'm Nathan Feather. I'm the CFO of PrimeRevenue. I've been with the company since 2006, so I've seen a lot over that time period. And certainly interested in talking about the issue of today, which is inflation.
Absolutely. Well, I guess we can just jump right into it. So Nathan, how would you describe the global economic environment today?
Yeah, in one word, I'd probably say challenging. There's certainly a lot happening right now. The markets are tumultuous. We continue to have supply chain disruptions. Commodity prices are rising, oil prices are rising, and now we're adding inflation with increased interest rates to that environment. So we have a lot happening as well in the labor market. Unemployment is extremely low, which is a good thing, but that's creating labor shortages for all sorts of businesses that are widespread.
Wow, so definitely some pressures out there.
For sure.
Yeah. Well, as a CFO, what is the specific impact you're seeing inflation on your day-to-day business?
Yeah, so for us, we're maybe a bit different than other companies. As a financial technology company, we're insulated from some of the impacts of inflation with commodity prices or things that are impacting supply chain. But for us, labor is number one. And so as labor costs increase, we're seeing that pressure as well. And it's only a matter of time until we start to see interest rates rising for us as well. So those are probably the two biggest issues that are facing us as a business.
Wow. Are there specific industries or specific businesses that you're seeing having the biggest impact right now? You mentioned as PrimeRevenue, a fintech. Are there other industries out there that are having bigger pressures?
Yeah, so I think as it relates to inflation, everyone is impacted and no one is spared from this, so to speak. For some large global corporates, investment grade companies, they'll see interest costs rising along with everybody else for borrowing, but they should be pretty unaffected by tighter credit or by limits on their borrowing ability. But for most businesses, for private companies, for sub-investment grade companies or non-rated businesses, not only will they see those rising costs, the rising interest cost, but they'll also start to see a tightening of credit and perhaps reduced capacity, which will be an extra challenge for them along with everything else they're facing.
Are there specific pain points that you're seeing a business is dealing with today on their balance sheet?
Yeah, so I think that sort of one of the top challenges, and it's not strictly balance sheet related, although it does have an impact, is with supply chain. And that's been going on for a couple of years, those types of disruptions in the supply chain. But businesses have become pretty good at dealing with that over 2 years. They've learned some new skills and how to manage through some of that uncertainty. So the biggest thing today, I think, the newest thing is inflation. And that, like I said, is impacting everyone with higher borrowing costs and also with higher costs of materials sort of coming through the chain. So that's creating, not only the internal pressure, but also some external pressure and pressure among trading partners as costs are rising all through the supply chain and being pushed sort of up that chain. It's driving a response by the purchasers, and that they need to decide how to deal with it. Will they just raise prices externally and try to pass those costs through? Will they reduce costs somehow within their own business to preserve margins, or will they accept lower margins or some combination of all of that? I think that is some push and pull that's happening among trading partners right now to cause some friction.
Between the buyer-supplier relationship.
In that buyer-supplier relationship, exactly.
Interesting. What do you think is the solve for CFOs that are out there listening to this? How can they get ahead of this or start to implement something that really helps turn around this impacting of inflation story?
Yeah, I think the first thing, and it's what sort of leaders always need to do, is sort of move past what's happening and focus on what are we going to do about it? How are we going to navigate through this? And hopefully, how can we use this almost to our advantage to move quicker and to take better action than some of our competitors are? And so once that happens, I think there are a couple of things that companies can do. You've mentioned buyers and suppliers a couple times. I've done the same. When we think about it, we try to segregate businesses into a buyer or a supplier, and that's how we operate. But in reality, most companies are both. So depending on which hat they're wearing, I think there's some different strategies that can be employed. I think the supplier side is easier, so I'll start with that. So as a supplier, if your customer is offering supply chain finance and you haven't taken advantage of it yet, now's a great time to do so. It offers up a very low cost source of liquidity that is at your discretion. You can choose to take advantage of it or you can choose to not, but you can use that early cash flow for anything you want in your business.
And that's as a supplier.
That's as a supplier.
Okay.
Exactly. And if you're not in a program and your buyer offers it, they're probably willing to open it up to a larger segment of the suppliers, especially now when there's all these challenges in the supply chain.
Sure.
On the buyer side, I think there's a couple of options. One is just the flip of what we said. So offering up a supply chain finance solution, if you have one, to a broader swath of suppliers is a great way to stabilize and strengthen the supply chain and maybe give them some extra tools to manage their cash flow needs. Beyond that, there are a couple of other options. One is, thinking about how you manage your own working capital. Sure. You could either be looking right now to increase working capital, in which case you can expand a program or launch one. And you can do that in a way that is beneficial to both you and the supplier. The other thing is if you happen to be sitting on excess cash and you're not happy with the returns you're getting from deposits, you can use your own cash to take discounts and pay suppliers early.
As a buyer.
As a buyer,
okay.
Right. So you can either use third-party funding or your own funding, and you can switch back and forth depending on, on the current business climate.
Interesting. Sounds like a few levers CFOs could pull out there.
For sure,
Yeah.
a few levers, yeah.
Well, hey, I really appreciate the time. If I kind of summarize, I think what I heard you say is rising rates of inflation are causing some pain points and pressures. Unemployment rates are very low, which means there's a lot of rising costs directly for fintech companies tied to employee costs. But there's a lot of levers that CFOs can get out there and get in front of to really help manage whether they're expanding revenues or expanding margins or just increasing cash flows and acceleration of that in supply chains.
For sure. We've seen it in the past through the Great Recession, through the start of COVID. Any challenge obviously provides an opportunity for those who are sort of forward-looking and willing to act.
Great. Well, thank you again, Nathan, for your time. And thank you for joining us. Don't forget, please check our other videos of the Financial Blueprint series. And if you want to learn more about PrimeRevenue and our solutions, please visit our page on LinkedIn or visit our website, PrimeRevenue.com. Thank you. Have a wonderful day.